Dan is calling from Ridgeway, Ontario. Dan, go ahead.
Thanks for taking my call. I'm calling about Dow Chemical. I purchased it about a year ago for 40, and it's been going up into the low 50s and then only retreat back down to where it is. Is it a trade stock instead of a buy and hold, or what's going to happen with the merger with DuPont, and which section should I hang on to when that happens? Thank you.
Okay. Let's just talk broad strokes to begin with. The chemicals sector within basic materials over the last few years has been by far the best neighborhood within basic materials. And of course, one of the big reasons for that is the big input cost for most of these chemical companies is natural gas. And as a result, with the low prices for natural gas and the plentiful supply, it's been a good thing. It is, however, also economically sensitive. And when the markets corrected last summer, between June and August, all chemical stocks sold off. In fact, almost all U.S. stocks sold off. They found lows, and in the case of Dow, tested the lows twice at $39. Stock rallied to 57, came back very smartly, and then when the markets pulled back in December and January, of course, it sold off again. So if I have to pick a neighborhood within basic materials that has sustainable, good fundamentals, it would be chemicals. They're building chemicals plants in the U.S. for the first time in 30 years because of the plentiful natural gas. Dow and DuPont both behaving quite well. Yeah, ultimately, out of the merger, there will be synergies that come. But if you look at the fact that the stock bottomed at $40, we're sitting at $47, but stock's about $15 off the lows. Market is voting the fact that this is one of the places you could see good recovery, especially chemicals and industrials. So we like the macro area. On the merger itself, there's a lot of moving parts, but in the short run, I like Dow Chemical, and I'd stay with it.
Okay. Dale is calling from Vancouver. Dale, go ahead, please.
Your thoughts on the Canadian banks, and do you have a favorite? Thanks.
Thanks very much.
Okay. So, Dale, for about 18 months now, we said we'd preferred U.S. banks to Canadian banks. And I think that probably the delta in Canada is going to continue to be a little bit more challenging than in the U.S. Having said that, in the near term, we've seen our risk work on the Canadian market start to show some improvement. The yields on the Canadian banks are exceedingly good, 4.5% and 5%. The payout ratios are not too high, so you could get a nice total return here of the yield plus a little pickup in the banks themselves. The concern, of course, is that down the road we may face some poorly performing loans coming from Western Canada the longer that energy prices stay low, and that's a risk, and I think you have to keep that in mind. If I had to pick one, I probably pick TD because, of course, TD has some pretty good exposure to the U.S., but again, I would be more inclined longer term to be focused more on the U.S. banks than the Canadian banks. I just think that the U.S. economy getting a little better is going to help. All banks are being pressured by their net interest margins, right? The very low short-term rates and the long-term rates. There's not much margin for them to make on deposits.
And there are the U.S. banks. Okay, let's head to Calgary. Kirk, go ahead, please.
Oh, hey guys.
Hey.
Good day to you.
Hello.
Just wanted to ask about Potash Corp. It's a good entry point. Maybe do you see them? I heard maybe some rumors about maybe potential takeover from Agrium. Maybe. Just your thoughts, and I'll listen.
Right.
Thanks.
So the agriculture space has been a very difficult sector over the last 18 months. Really, there has been very little improvement. Price for corn and wheat relatively weak. Seasonally, this would be a time when you start to look at these stocks. And so maybe with a pickup in the market, you can get a bounce, but I don't see something sustainable in the near term, and I would prefer to focus in other sectors.
Just doesn't excite you?
We aren't bottom fishers. We're never going to buy something hoping or thinking that it's going to turn around or that it's cheap. What's cheap can get cheaper. So I would be very cautious about trying to play these bottom fish plays.
We're going to be right back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management. He's answering your questions on North American large caps. You can give him a call right now, 1-855-326-6266.